Hey everybody, welcome to the live stream. I'm Michelle. This is the Cressivo channel. This is the channel where we talk all about creating cash flow on a regular basis every single week to change your lifestyle, and we use options to do that. Selling puts, selling covered calls, super easy, 2 basic concepts, and we walk through that with you step by step. This is a great opportunity to bring your questions. You know, a lot of times when we're trading, right, there's not a whole lot of people perhaps in our circle that trade stock options. So there's not a lot of people for us to bounce questions off of or make sure that we understand things correctly. So this is a great opportunity, these weekday live streams, to bring your questions, put them in the chat. Hey, David, I see David, my fellow New Yorker from Syracuse. Welcome back, I should say. And so today's Friday. Today is the last day of the month, which who cares about that? But Friday is a great day in that we have options expiring typically on Friday. So I'm going to go through the account that we've been managing together on these live streams to talk about kind of like the things, okay, what should I do? What could I do? What if I wait till it expires? What if I buy it back? How does that all work? And that's what we're going to do. AP asked any ideas for AMD covered calls. I can go through that as well. Give me a moment. I just want to go through the positions and I'm going to answer that question specifically. So here's the positions page, right? So this tells us our net asset value. That's that number. Like, it doesn't really matter if we don't need to access capital from this account. It's kind of like, let's say if I own a house and there's a housing crisis and the market value of the house that I own drops. It doesn't matter unless I want to sell my house, right? This is the same thing. Unless you're liquidating your positions, it doesn't matter. The thing that does matter is your realized gain loss. How much money are you putting in your pocket on a regular basis? So since I started this account, walking through all these trades with you guys live on this live stream, I've made $5,589 on a 100K account. So here's the thing when it comes to selling options. It's so easy to make money. It's harder not to lose it. So we talk a lot about risk and risk management, and that's why we go through managing the positions, sometimes buying them back. But it's important to note that, like, worst case scenario, if the tickers that you're trading goes down, maybe you don't make as much money this week, right? So like this week, the past 7 days, in this account, I only made $261. But guess what? Did I lose any money? Do you see any red here? Any red here? No, it's all green. As long as you're not liquidating your positions and taking a realized loss, worst case is you don't make as much money. But there are ways when your tickers go down, and we've been talking about this particularly the past few days, there are ways when your tickers go down that you still make money. Sell another put on that same ticker with a lower strike price does a couple things. Number one, it gives you more income, right? So it keeps that cash flowing into your pocket. And then number two, if you have to buy the shares, now you're averaging your cost down. So that's what we do. And that's the reason why you don't want a whole bunch of tickers, right? Like I would generally say, a lot of times people ask me, well, how many tickers should you trade? 5. Trade 5 maximum. And it's not a bad idea to have a little bit of non-correlated stuff. So you don't want like all tech companies, let's say. I mean, you could, and this account has mostly tech companies. In fairness, those are my favorite ones, especially AI companies. I'm a big believer in AI. I think AI is life-changing. And those of you who maybe have not embraced the AI movement yet, you need to hop on the train because I mean, I could speak from experience. I've created this app that I'm using for my trading and that other people are using to make money and help them make better decisions. I've used AI to code that. So AI is like magic. It is literally like magic. So that's my favorite. So let's kind of go through the tickers here. So I have some Avgo. I've had this Avgo from the beginning. And it's kind of underwater. I paid $477 for the shares. Right now, Avgo is only trading for $387, so like $90 cheaper. So I have this pretty sizable paper loss, and it's hard to sell calls, to that higher basis, right? Because since the stock is trading so much lower, there's not any money in it. So the past few days, maybe the past week to 10 days, I've been selling these super short-term calls, just taking in like $50 here, $100 there, that kind of thing. This morning I sold one that's expiring Monday. I like these tickers like Avgo, Tesla's another one. I think Amazon's another one. They have 3-day expirations, Monday, Wednesday, Friday. So it gives us more flexibility. Me, I like short-term. I know a lot of you guys sometimes, I don't know if it's some of you guys here on this call, but certainly on this channel, that talk about like selling monthly contracts or 6 weeks out. I never do that. Very, very, very rarely do I do that. And the reason is I would rather just take in small pieces of money, but over and over and over again. And then secondarily, I don't want to tie up my capital for an extended period of time. So even though I'm not making a lot of money on Avgo because the prices come down, I'm still making money. So it doesn't matter if there's a paper loss. HPQ, these shares are probably going to get assigned today. So here's why Friday is a cool thing, because I have a lot of today expirations. We can see 731. So I have 100 shares of this HPQ that I paid $26.82 for. Then after that, I sold a $27 call. What does that mean? That means that if HPQ stays over $27, I'm going to sell my shares. Well, that's cool because I paid 26 and change, so I make a little bit on the capital gain. Now, I don't really care about making a lot on the capital gain. What I care about is making income, because capital gain is like secondary. You're either a stock trader or you're an options income trader. And you want to be careful not to confuse the two. Me, I'm an options income trader. I want to trade options, sell options in order to create weekly income so I can live an amazing lifestyle. It doesn't come down to anything more than that. I mean, that is just the premise of everything that I do. So I had sold this. It wasn't for that much money, but rate of return wise, it was pretty substantial. These shares are probably going to go. Now, if you have this app, I built this super cool feature not long ago. It's to like analyze. A lot of times, like, you don't want to put a trade on and then forget about it. Listen, this is not like I'm going to buy some stock and I'm going to wait 5 years and not look at my statement. This is about making income for yourself every week. And there is a little bit of work to it. There's not a lot of work. So generally speaking, depending on how much income you want to make and how active you want to be, you can spend as little as 15 minutes per day, like legit, no joke. But if you want to like flip in and out a little bit more, sometimes there's a little bit more time, maybe an hour. You know what I mean? I don't know if I could spend an hour a day and do what I want when I want and create myself weekly income. I mean, it's not a bad gig. So I added this functionality to the app to see like, okay, well, should I wait? Now, right now, this is a really good example because right now HPQ is trading at 27.13. So it's just a tiny bit over my strike price. So here's how you guys want to look at that. You want to say to yourself, okay, do I really want to sell that HPQ? Maybe what you want to do is buy your call back now. Like, don't wait until expiration, the end of the day today, but buy your call back now and sell the shares. So this button does all the math for you. Check it out. Like, okay, I hit the button and boom, it pops up. So if I was to do that now, I would net $25. So I'd get rid of the shares and that capital goes back into my account so I can use that on another trade and be out of the trade and take that risk off the table. Or I can wait until the end of the day and assuming it expires over $27, I'll make a little bit more money. So in the past, I used to calculate all this stuff. Listen, I've been trading a long time. And in the past, I used to calculate this using spreadsheets, right? So I'd create this spreadsheet for that spreadsheet for that. Those of you guys who have been on this channel for a while, you've probably seen in older videos, like I would share those spreadsheets with people via Google Drive or whatever, and it was working, like it was functional, but it wasn't efficient, right? Like, what's the point of, like, is there a better way, right? So over the past few years, I would look in the marketplace, like, man, I wish there was like some sort of tool that helps me like put all those numbers together so I don't have to be plugging them into a spreadsheet. But there wasn't anything, and there isn't anything still to this day other than this app. So what I did was I created this app to fill the holes that I was looking to fill for myself. for trading to make things easier. And then I launched it to the public. So you can use that for this. Let's just keep going down the list here. So that's HPQ. I'm just going to wait on that a bit. Oracle. Now here is a big, here's a mistake that I see a lot of traders make, and it's so common. When you have multiple shares, like you see how I have 300 shares of Oracle, but I have 100 that I bought at 244, and then I have another 100 that I bought at 118, and then I have another 100 that I bought at 127. So all different prices. The average basis of all 300 shares is 163. We can see that here, right? 163. Now, when we have multiple lots like this, we can either sell 3 contracts to that average basis. You could do that if you wanted to. So I could sell, let's say, 3 165 calls, or I can target each lot. And I prefer to target each lot because I get paid more. Number one, I get paid more. And number two, I tend to shave off of those shares on an ongoing basis. So what I'm doing is I'm just flipping my money over and over and over again. So I created this new functionality. Actually, I did this yesterday in the app where, it shows me visually. There's nothing like on your broker-dealer site, there's nothing, I don't care what broker-dealer you're with, because I've been with lots of them, most of them, in fact. There's nothing that shows you what I'm looking for as a trader. So that's why I built this, so I can visually see things and make better decisions. It's all about making the most educated decision and being efficient, right? So for example, I have 100 shares at 118.33. What did I do? I sold a 119 call. Here we go, a 119 call that's gonna expire today. So I took in $330. Now we can see that Oracle right now is trading at 129 per share. So I bought the shares at 118, then I sold a 119 call, took in $330. I think I did this on Tuesday, if I remember correctly, or something like that. So $330 for a few days' time. And now some of you guys here, maybe even in this program, will see this. Oh my gosh, I bought the shares at 118. Now that stock rocketed and it's at 129. I have some FOMO, right? Raise your hand if you ever felt that. I have some FOMO and I wish I didn't sell that call. And those people roll their call, which I'm not going to go a lot into detail because we're going to just agree to disagree on this. There's people in this community that think that that's smart, but I'm telling you, based on 29 years of trading, and not just that, but supporting myself from trading and having an amazing lifestyle. I'm not bragging, but I'm saying that from that experience, that would be the dumbest thing in the world to roll that. Right now it's trading at 985. Why? Because the shares went up, right? The price went up. So the price goes up, the call goes more expensive. Why would I want to close this and recognize a loss of, what's this number? $655. It's the stupidest fucking thing in the world. So those of you guys who believe in rolling a covered call that's already working, that's a winner, and you want to roll that, cool. Just keep doing the same goofy thing, right? I don't do that, and it doesn't work. And maybe it's worked temporarily, short term, like something like that. But why would I take a $600 loss? I would be ridiculous. I don't have stupid written on my forehead. A lot of times people will say, well, what do you net? I rolled it for a credit. Oh my gosh, I wish I had $1 for every time I heard that goofy line. Okay, you rolled it for a net credit, but you still take a 655 or 665, whatever this number is, loss. I'm just going to keep the 300. How about this, brother? I'm going to keep the $330 in my pocket. I'm going to shave off 100 shares of Oracle, so I'm going to reduce my risk. And then next week, maybe Oracle dips. Maybe I'll sell another put, or maybe I'll look at another ticker. Who cares? I have the flexibility to keep my cash and take that risk off. It's not about making money. Listen, anybody can make money, especially if the market's going up. Bravo. Pat yourself on the back if you're making money. When the market goes down and you're still alive after that dip, that is what separates the true successful people from the non-successful people. And that's just what it is. So anyway, I'm going to wait on this, and I'm just going to let my shares go. It's all good. And I could analyze it right now if I wanted to. So I can say, okay, well, let's say if I don't wait until, and actually this might be advantageous. This is why you guys need a button and a tool like this, because this is showing you, I can actually buy my call back now and then sell the shares right after, not roll the call. So don't confuse the two. Buy my call back, take that loss, but sell my shares as well and take a big gain right now, or I could just wait until it expires. So it's like a $30 difference. If I wasn't talking on this live stream and if I wanted to like do some action and make an extra $30, I would do that actually, because that's why wait until the end of the day and make a little less. Why not just do it now and make a little more? And you can also kind of like, that's based on the mid price. Sometimes when there's a spread, a pretty big spread between the bid and the ask, like you don't want like a tool to show you like a non-reality type of number. So I added the functionality. Okay, well, let's say I had to buy my callback at the ask price rather, right? Well, now we can see I make a little bit less, $369, versus waiting until the end of the day, locking in $397. And not just, again, it's not just about locking in $397. It's taking the risk off the table. If you haven't endured a market cycle, in which case you lost a ton of money, then you haven't been trading long enough, because it happens to all traders. It's just something that happens. It's kind of like, I'll give you an analogy. I like to use analogies to help people understand. It's kind of like being a chef. If I'm a chef, I'm going to have maybe some burns on my fingers sometimes, even if I'm a really good chef, because that happens, right? When you're cooking a lot and you're making, extravagant meals. This is the same thing. If you're a trader, even successful, especially successful traders, you're going to have cycles where you lose a ton of money. And what you do is you learn from that and you say, oh, I'm never doing that again. So, and that is a big reason why I built these tools. Primarily because margin. Like I've always used margin just to make more money. And I've gone through cycles where, man, like, holy cow, like I wasn't not anticipating, but had I had a tool like this, I would have never endured some of the trades that I have gone through. So this is sort of a result of all of that. So let's go back to the positions here. I'm almost done kind of looking through those. I'm just going to kind of keep that. Oracle is, I have these 300 shares. We just talked about that. SMCI is kind of similar, 400 shares. I bought 100 at this price, 100 at this price, and then I bought, 100 at $26 and change. Then what did I do? I sold a $27 call, right? I made $86 right now, or SMCI is at $28. So assuming it stays where it is, I'm going to lock in this gain that I sold the call for, and then I'm going to get rid of my shares and lower my risk. It's all about risk management. Again, and I know I said this before, but I'm going to say it again. Anybody can make money if the market's going up. Don't get too overly proud of yourself until you've gone through a downturn, and because that's really what separates people. SpaceX, right? So I have some SpaceX. I sold this call. This is going to expire worthless, and if I wanted to, I could buy it back right now. I'm not gonna. I'm just going to wait for it to expire, and then I'm going to sell another call on Monday. And then I have this garbage TSLL, this leveraged, and by the way, leverage ETFs are pretty much garbage. And I did this as like an example, an illustrative example, and I like Tesla in fairness, but this is not holding a chunk of Tesla. It's all leveraged ETFs are holding packaged crap from banks, counterparty banks. And so you don't even know what it is that you have under the hood, so to speak. So can you make money on a short-term basis? Sometimes, yeah, a lot. And that's why, these marketing companies for these ETFs, they target, retail traders, and they price their investment products super low to attract all these people, but they're garbage products. So I'm just going to leave that and let that go. That was just an example that I did here. Let's go over AMD. So let's look at AMD. I haven't traded AMD for a minute, and I'm going to look at it here first. And let's see, AMD. And I'm just going to pull up a chart, because before I ever look at anything, I just look at a 1-year chart. I just want to get a sense of where the thing is, right? So I see it's kind of sideways. sideways, and then it kind of went up. We have this gap here, so be cautious of this gap. Gaps will typically fill. So when I look at this initially, it suggests to me, okay, that it might have a little bit of a dip to fill that gap at some point here, right? But it's not like AMD is a great company. AMD, NVIDIA, solid AI companies. If you're looking to sell covered calls, let's see. Any ideas for AMD covered calls? If you're looking to sell covered calls, this is a great tool here. We can look at short calls. There's a couple places that we can look at that, but let's look at it here, AMD. And I like short-term stuff. So, and AMD has Monday, Wednesday, Friday, which is kind of cool. So let's just look at Friday as an example, right? So let's see. Actually, I'm going to look at it here instead. Give me a second. Let's say I don't even have AMD right now and I just want to buy AMD and then sell a call against it. I'm not sure if that's what you're asking, AP, who put this message on here, but I'll show you that. We're going to look at August 7th, which is Friday. Now, AMD is trading at, let's see. $486 right here, $486.36 per share. So let's say I sell a $487.50 call, because that's how I do it. Again, there's lots of different ways to skin a cat, but if I buy the shares here, I'm going to sell a call right over what I paid for the shares, because I don't care about the capital gain. I just want as much premium as possible, right? So let's take a look. I click the button and it's like freaking magic, right? It shows me here, right here, 486 per share. If I sold the 487.50 strike price, it's paying $2,500. $2,500 gets dropped into your account right then and there. You're not buying a stock, waiting and hoping and waiting 6 months for it to go up to recognize any gain. How much money do you need to put that trade on? You need 46 grand if you're not using margin. So if they're paying for the shares, that's how much money you need, because you're buying 100 shares, right? What's my annualized rate of return? Well, 286%. Me personally, I wouldn't generally buy 100 shares and then sell a covered call. I would start with a put. So let's look at that first. If you want to trade AMD as an example, because I think it's better to keep your money in cash and then only buy the stock if it goes on sale. So let's look at, I'm going to look at something different. I'm going to look at Wednesday, because I want to give you guys different suggestions, different ideas. Like maybe you don't want to go a whole week, maybe you want to go a half a week. And then I look at delta. We see the delta here with the little triangle. Delta is like, what's the statistical likelihood that the price is going to go down? Well, that's what the delta tells us. So let's find something like kind of far away, like maybe a 15 delta, right? So it's kind of far away. In fact, it would have to drop 11%, right? We see that there, in order to be required to buy the shares. How much money do we need? 43 grand if we're not using margin. What's the contract paying? $485. Again, I could look at the bid, I could look at the mid price, I could look at the last price. The last price it traded was $500. What's my annualized rate of return? You never want to put a trade in unless you look at annualized rate of return first. Because if you don't do that, man, you're like throwing a dart at the dartboard, but your head is turned to the side. And you just don't do that. Like so many people I meet that don't calculate that, you're doing yourself a disservice. It takes like literally 3 seconds to do that, right? 84%. per year. And this is why you can use options to create yourself an amazing lifestyle on a regular basis. Listen, I'm living proof of that. Are you doing any covered calls at all? I don't know what you mean by that. I mean, I just showed you covered calls in the account here. Green is good. I've been selling puts on smaller stocks. That's totally fine. Listen, this is important for you guys to recognize. These strategies work whether you have a big account or whether you have a small account. They work. And if you have real money in the market, you should be using a tool like this. You should be, and frankly, you should be using this tool because there's nothing else like it in the marketplace. And I'm not just saying that because it's my tool and I'm the one talking about it. I'm saying that because I built it with the reason that I couldn't find it anywhere in the marketplace. And I'm a big believer, man, if I don't see the way, I'm gonna make the fucking way. And that's how I live my life, trading and other things too. Let's see, how many contracts per day, per trade would you say? If you're starting off, start with one. One of the biggest mistakes that new traders make is they trade too big for their account. Especially if you're new, there's no reason to be trading multiple contracts. Start with one. Get your feet wet. Make sure you understand what you're doing. Make sure you have tools that help you, right? That help you make good decisions. You don't like walk before you run. Is my answer to that. Shalita says, Shalita's one of my favorite users. Shout out to Shalita. I sent her a message this morning. That was helpful, right, Shalita? Because I saw, and by the way, you guys can connect your broker dealer on this in this app. So you just go here to connect a brokerage, right? And no matter who you're trading with, Interactive Brokers, Schwab, Robinhood, Webull, whoever, you can connect your brokerage. And the advantage of that is that you can have like live position syncing. Like okay, if I make this trade over here, I'm gonna see it in my app. And then the big advantage is, okay, let me simulate a drop, because this is where, again, what separates the successful people from the non-successful people. What happens if all my stuff goes down 20%? What's going to happen, right? Well, what is that? Where does my margin go? What goes in the money? Where does my portfolio value go? What does each contract price change to? Man, like if you got real money in the market and you're not seeing this data, like again, you're driving a car down the freeway with without your glasses on. Is a good way to look at it. I was using, so Shalita says this, I was using the average basis for selling 2+ covered calls. If I understand correctly, you suggest a better strategy is to sell the lower priced lot first when selling covered call. So then would be LIFO would be the better default. So that's a really good question. And I think you sent that on the voice memo that you left me, and I didn't answer that. Sorry about that. Let me answer that. So first of all, a couple of things. Number one, on the in the settings page, you can, right here, you can put whether it's FIFO or LIFO, first in, first out, or last in, first out. And you also generally have that that default with your broker dealer, right? So you also have that default. But, and this is important, and I know Shalita, you're with Schwab, and so I'm super familiar with Schwab because that's who I'm trading with now. You set a default with Schwab, but you can also change whatever lot you want to tag that contract to no later than end of day on Monday. So you have that flexibility. So let me go through an example. Here's what that means. So Oracle, I have 300 shares, right? But I bought 100 at 244, 100 at 118, 100 at 127. Now let's say now Oracle's at 129. So certainly this 119 call is probably going to get assigned, right? Because today, it expires today. So you can do a couple of things. I generally don't kind of like count on what my default is at the broker dealer. So the way I do it is Monday. So first, a couple of pieces. In answer to your question, Shalita, it's generally 99 times out of 100 better to trade one call to that lower strike instead of trading 3 calls to this higher strike. Because 163, if I trade a 164 contract, let me see how much that's going for. 165 contract, let's see if I look at like next week as an example, 165, it's only going for $6 bid. So that's not much money. So instead of getting $6 times 3, $18, no, don't do that. I sold this one for $330. So you see how you like massively, or not just make more money, but I'm also, and I want you guys to hear this, yes, I make a lot more money, $330 instead of $18, number one. But number two, I'm going to get rid of those shares. You don't want to keep shares, because if you have the opportunity, you want to shave off your shares, because having shares, you have paper fluctuation. And if I had the choice between having paper fluctuation, not having paper fluctuation, I choose not having it. Because then if I needed to access some of this capital, I can do that, right? And not have to take a loss. So in answer to your question, it is better generally to sell that lower priced. Like I explained to you on SpaceX. Instead of making, $10 or whatever, you can make $50, or I don't remember exactly what the number was. But yeah. And so LIFO, I would say don't confuse yourself with the LIFO FIFO. I mean, you could set it would be last in, first out, so you're correct generally, but I wouldn't count on that. I wouldn't even confuse yourself. I always say, I told my daughter this morning, like, you can only fit so much stuff in your head, and I try not to put anything that's unnecessary in there, because I want room for the important stuff. And so instead of LIFO, FIFO, I just call Schwab on Monday and say, hey, brother, like this Oracle 731-119 call that got assigned on Friday, I want to tag those shares to the 100 shares that I bought on July 24th with a basis of 118.33. So that's how you do it. Different broker-dealers have different requirements, by the way. So that's how Schwab does it. Interactive Brokers, as an example, you got to do that on Saturday, actually. You don't even have until Monday. So you have to understand who you're trading with. That's why also everybody needs a mentor. Like, everybody needs like this kind of Q&A or mentor or a mentor. Otherwise, you're going to lose money because it's very easy to lose money. And if you haven't done that yet, it will happen if you just stick around long enough. Shalita says, yes, I've learned 2 lessons lately, one of which was to never mess around with leverage ETFs. That's a good lesson to have learned. And hear you loud and clear, no more of those for me. Yeah, for sure. Leverage ETFs are garbage. And I think when the market has its next bear market, those leverage ETFs are going to lose a ton of money. And again, it's for so many reasons. I have some, I don't want to go too detailed into leverage ETFs here, because I have some really good videos that I've done recently on leverage ETFs. Alex, one shot for 1% a week, premium thoughts. Oh wait, I shot for 1% a week, premium thoughts. I think what you're asking me, Alex, is you're trying to make 1% a week, and is that a good idea? I think that's what you're asking me. I think that's a great idea. 1% a week is 52% per year. I mean, I think that's fantastic. I mean, how can you go to like the local Edward Jones office and invest in some goofy mutual funds and make 50% on a regular basis over and over again? No, absolutely not. So yeah, I think that's good. Ryrome, with the 2 dogs, Ryrome. AMD has earnings August 4th. Would you avoid earnings? I think anybody trading, especially if you're trading during earnings, you need this app. So I have been going over a lot of this on these calls, but I'm going to stop doing that because I'm a big believer, like, teach a man to fish. Don't just give him the fish. I feel like sometimes me going over some of these, like, I'm going to answer you, but I feel like it's more like me giving you the fish instead of teaching you to fish. You want to use this app, Earnings Edge, and you want to say, okay, AMD earnings is August 4th, right? Well, first of all, we see a big red thing here. So why is that? Let's walk through it. So the market is anticipating a 9% move, right? Historically, it's only been 7, so that's a good story here, and we could hover over these tooltips to give us some more information. This is not a great story because usually it goes down more often than it goes up. So me personally, I probably wouldn't take that trade because I want the best setup. I want the most likelihood for success when I put a trade in. But if you did want to put a trade in, this will tell you, okay, even though we're not recommending this, if you do a put, here's a strike price, here's the expiration date, here's how much premium, here's the capital you need, and that's your annualized rate of return, because it's giving you a suggested trade after earnings underneath what the expected market move is. This is the fucking holy grail of trading, I have to say. Like, those of you who subscribe to, I subscribe to this trade scanner, or I'm looking at this FinViz scanner, whatever, none of those have any comparison to this. This does, I'm going to explain to you what this does. It's like driving a Porsche versus driving a Chevy. I'll just put it like that. Would you rather drive a Porsche I don't know about you, but I would rather drive, and I do drive a Porsche. I would rather drive a Porsche than drive a Chevy, right? That's what this is. Look at other scanners or look at this. This is saying, number one, earnings give us as option sellers a significant advantage because the volatility is higher, so we're paid more for our risk, number one. Number two, we don't want to just do that blindly because volatility can cut both ways, right? It could go up a lot or it could go down a lot. So I don't want to like just get in and then have my ticker drop and then what am I like stuck waiting, right? Or maybe I got to buy more after it goes down. No, this gives you like 20/20 vision to be able to see as clearly as possible. That's what this is my favorite part of the app. I mean, I got a lot of favorite parts. I like the simulator. I love the margin piece that I built. I like the syncing with the broker dealer so you can see all of your stuff in one place. But from a discovery standpoint, help me find a good trade. This is by far second to none, not in this app and throughout the industry. So yeah, there's that. And let me like Shalita, you're an app user. let us know in the chat, how is this app and how has it changed the way you look at trading, how you make money, that kind of thing. So don't take my word for it. And sometimes we have other app users. I know David's not. I'm not sure about AP. But yeah, whoever is on this call, and if you're an app user, put in the comments like how has that helped you with your trading? AP says, I own AMD and up a good percent. I want to collect some income without getting my shares called. That's why I want to sell covered calls. I mean, there are people like that, and that's not necessarily wrong. I think you could do that. So you could, and you could just go here, let's say. Let's just go here and covered call, and let's say, what's the ticker we're talking about? AMD, and let's see. Oh, 100. Whoops. 100. And let's say I paid, I don't know, $300 a share. And let's say I want to look at Friday, just as an example. You could say, okay, well, I don't want to sell a covered call with a strike price of, $3.90 because I want to keep my shares. So let's say I want to sell a call with a strike price of, I don't know, let's say, let's see, 485 right now it's trading at. So let's just look at, I don't know, 30 delta, right? 527.50. That means it's got approximately a 30% likelihood that the stock is going to go from where it is over the strike price, right? So we can just take a look at that. Let me just squash my thing smaller here. Oh, I think my page is frozen. Hang on a second. Covered call, AMD, 100 shares. Give me a second here. 87. $520 I think we were looking at, right? It's paying $1,275. I don't know why I can't. Oops. Shoot. Hang on a second. I think I have too many windows in the way. See, I got all these things. I got too many tabs open. Give me a second. I'm going to look here instead. AMD. The 7th. And let's say I paid $300. And let's say I wanted to do I think we were looking at the 520 call, if I'm not mistaken. That was like a 32 delta. And this will help us understand, okay, well, here's how much cash I have, capital, in that trade. Now I'm just using $300 as an example. You didn't say exactly how much you paid for the shares, but this will help you understand like your rate of return. I would say one thing to that remark, AP. That is a common way that people look at it, like, hey, I got these shares and I've had them for a long time and I want to keep my shares but still make money off of that thing. I think that's valid, but I think once you start trading options and just be taking income, I think generally you switch your logic around. to the fact that, like, who cares about the shares, the stock? I mean, that's a paper gain. And the only real gain that hits your pocket is the cash flow that you create by selling options, and maybe some dividends, but that's small, whatever. But you can use this to estimate that. I hope that answers your question. I shoot texting driving. I don't know what that means. Shalita says, this probably sounds cliche by now. This probably sounds cliche by now, but this app is literally like none other on the market. I've paid for a few other subscriptions, and this one outshines them by 1,000%. First of all, thank you for saying that, and I wholeheartedly agree. And we have office hours every Saturday morning, 9 o'clock Pacific time, for free for all app users, where we walk through all this functionality. And right now, there's a 7-day free trial, and it's $100 a month. Probably at some point, I mean, I think this is like the value is way more than $100, way more, because of all the stuff that you get. And then depending on, how big your account is, like some people are trading, if you have a couple $100,000 account and it's helping you make, let's say, 50% per year, and you're making $100,000 and you're paying, $100 a month for this tool, it's like a no-brainer. It's like a no-brainer. Anyway, hope that helps. Let's see what other. I guess I don't have any other questions in the chat. I feel like sometimes we have a lot of people on these calls, and then sometimes not so many. So yeah, I'm just gonna drop off because I got things to do. And all right, one more. No, there's no more. I thought there was one new message. So I want to say thank you for watching the live stream. I really hope that you learned something. And my intention is that you learn stuff, right? And you become better. And really the most important thing is learning how to create income for yourself on a regular basis, because this trading options absolutely does that. So yeah, anyway, have a blessed rest of the day. Today's Friday, so that's a wonderful thing because options expire Friday. And I'll see you guys on Monday, same time, 12 o'clock Pacific. Cheers for now.